Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor. Here's Ray Fuentes from Link2, because this weekend they are my sponsor, by the way. They decreased their prices to $5,000.
Link2 has just made it easier for you to invest in top performing private companies. With our investment minimums of $5,000, whether you're a first-time investor or a seasoned Link2 member, now's the time to capitalize on this opportunity. And why stop there? You can even invest in Link2 itself, the company revolutionizing the private equities market and providing accredited investors with access to private investing. This weekend, take control of your investments in the private market with Link2. Our platform prioritizes privacy while maintaining usability and intuitive features. Learn more and invest in Link2 today by visiting our website or downloading our app.
There you go. Links in the top of the description. Tell them DAI sent you. Now, check this out. We covered this from where Coinbase acquired One River Digital, where Jay Clayton just happens to be. But John Deaton pointed out this quote: "We're going to see a lot more strategic combinations," Clayton said in an interview. "Traditional financial players are starting to think about acquisitions of distributed ledger or blockchain companies. Just as Charles Payne and I discussed, crush crypto so legacy players can buy." This is what they did in the crypto winter of 2018-19. While they were going out and talking about, they were having Goldman Sachs write articles where they were saying Bitcoin's going to go to zero and all this stuff. And meanwhile, we found out they were all buying while they were doing this. This is no different, but this time they've got the help of Gary Gensler on top of it to make it even worse, because in my opinion, this is the final like real crypto winter before everything becomes legitimate, and they're using Gary as a tool for that. Excuse me. Something hit my throat wrong. Sorry about that. So that's what this is about. That's also the reason I keep talking about Link2. And this is not a sales pitch or anything, but that's part of the reason I'm buying these private equities, is because I know that that's what we're in. And what Jay Clayton's saying right there is so now they've crushed crypto to the point where you know that these people have to be looking at these companies like PolySign and all these different companies that and just like they want to scoop them up, or like an iTrustCapital or those kind of things. But anyway, that is so what's going on. Then Representative French Hill, who has been pro-crypto, he says he was delighted to host former CFTC Commissioner and SEC Chairman Jay Clayton at the Digital Asset Subcommittee meet and greet I organized this week. So I said, "Hey, Representative Hill, you do realize that Jay Clayton is the one who got this whole SEC crypto mess rolling, don't you?" I mean, these people are all on the same team, and I don't care what they say. They talk about new days, and then they're hanging out with each other and having drinks. Okay, I've lost a lot of faith in this country and just people in general through this crypto thing. Egrag Crypto, XRP falling wedge. Whoever that is, TA stated that the failure rate of FW is considerably low. Failure rate for upwards breakout is only 8 to 11%. FW's bullish formation as it reflects sliding prices starting to lose momentum. XRP is super bullish. And that's really all I had to read for you there. All right. This is just a thought I had this morning, and I totally stand by this. Remember, the first thing Stuart Alderati said when this lawsuit was dropped against Ripple back in 2020, the first thing out of his mouth was, "This is a Ripple test." Well, I've talked to attorney friends, and in order to have a Ripple test, you have to go to the Supreme Court. That is what's been told to me by attorneys. For that reason, that's why I believe that this has been their threat all along. I think that Ripple, Stuart Alderati, and all these guys, I think they know that Gary wants a win, and Gary can't get a win if this goes all the way to the Supreme Court, because Gary's not going to be in the SEC chairmanship. I think they know that he wanted a Ripple trophy so that he could then go and get the treasury job. And I think that's why they keep saying Ripple test as a threat. And then here's some interesting thoughts from this Ashley Prosper on this. There may very well be a Ripple test for cryptos in the future, but my question is, does Ripple have to be the one to go to the Supreme Court to make it? XRP may get its clarity, and other projects sued by the SEC may compare themselves to Ripple. These projects, for example, the Ethereum Foundation may go to the Supreme Court, arguing they are comparable to Ripple, thus creating the Ripple test. Or am I completely wrong? I think it's going to go down something like that. I do not believe. I think this is Ripple. This is the Ripple threat. Hey, you keep messing around, we will go all the way to the Supreme Court with this, Gary, and then you don't get anything out of it. And we know, if we know anything, we know that Gary is all about Gary. He doesn't give a rat's behind about you and me, because Gary's already rich, and we know that he meets with his Vanguard, the people managing his money over there at the SEC all the time, because it's on the calendar. It's part of what he did not scrub off the calendar. Crypto companies behind Tether used falsified documents and shell companies to get bank accounts. Now, folks, here's the pattern. Have you noticed this about crypto? Everywhere where there is no transparency, our government leaves alone, which is red flag city, okay? Bitcoin, you don't know who Satoshi is, and they don't even try, they don't even talk about it, they don't even raise it as an issue. Government leaves it alone. Tether, they don't tell you what backs Tether. Nobody says anything. Gary leaves that alone. Ethereum, disguised whales in the ICO. Nobody's interested at all in going and finding out who those people were, even though there could have been money laundering there. Nobody wants to know. The government's not interested in that. That is not a coincidence, folks. There's a reason that the government just happens to not want to go after all of the companies and or entities or people where there's secrecy and nobody knows what went on. But they could easily find out. They could easily go and say, okay, we met with the 4 Satoshis and here's who they are. And then Bitcoin goes down in flames. They could easily say, hey, we're going to do an audit of that Ethereum ICO and we're going to track it all the way back to all of those disguised whales, their email addresses, and we'll find out all the individuals that bought and where it went after that. They could do that today. They could go after Tether today and find out exactly what backs Tether, but they don't do it on any 3 of them. And that's the tell, folks. Listen to this clown, and I do mean clown because everything he says in this video makes absolutely no sense. The whole video gives me the EBGBs.
Tether has just, been the major issue that crypto skeptics have had.
And let me tell you why he's rationalizing something that can't be rationalized. The reason he's doing it is because he's a Bitcoin maxi and he knows full well Tether props up the Bitcoin price.
For 5+ years at this point, and justifiably so. Their level of transparency has been extremely poor. They just have a weak track record there.
And so when we talk about transparency, let's talk and explain that to folks who don't have traditional finance backgrounds in terms of the quality of collateral, et cetera.
We fundamentally don't know where the assets that they're holding are, which is on purpose. That's a feature, not a bug.
It's a feature. It is a feature that they are hiding what backs Tether. All these people that are sitting there with their money in Tether, it's a feature that they're hiding from you what actually backs it, while they say that it's a stable coin, like tied to the dollar or whatever.
About that,
please.
And because
that's like saying it was a feature that FTX was funneling money to Alameda, the customer money to Alameda. That was a feature, not a bug.
The purpose of Tether.
It was a feature, folks. It's a feature that the whales from the Ethereum ICO are disguised. It's a feature that the government knows who the 4 Satoshis are, but acts like they don't, and nobody talks about it. Those are all features.
Allow people to hold dollar-like tokens and transact on blockchains in a way that's remote from the regulated U.S. banking system. So that is the purpose. It's very different from the purpose of USDC.
I can't even listen to any more of that. That is so BS. I don't know what to tell you there. There's a reason that more people listen to social media in the XRP community than all of the others. There's a reason. And at the end of this, I'll show you some of the Ethereum Denver video, and it will further cement the reason. We're the adults in the room. We always have been. We're calling out the obvious stuff that is either frauds or something not good, nefarious, dishonest, not transparent. That's the stuff that we've been calling out. Ethgate, the things that are truth that nobody wants to talk about. Look at this. New. A contest to build modern cities and flying cars might sound like makings of the Jetsons. For Trump, they're part of the futuristic policy proposal for a quantum leap. And I went and watched the video. He actually used that word, quantum leap. There are no coincidences, folks. I think quantum computers are going to play a major role in this transition that we're all going to do, even though everybody said, oh, no, that's decades out. Whatever. Then this one, SEC official speaking at the bankruptcy hearing to determine if Voyager should be sold to Binance said the agency's staff believes Binance US is operating an unregistered securities exchange in the US. And John Deaton says lawsuit is coming. Now, here's Gary. This is one of the few times that I've ever seen anybody have an actual somewhat of a real interview where they're kind of trying to hold Gary Gensler accountable.
What one particular builder in the ecosystem, the Ripple founder, had to say a little bit earlier, if you could just take a listen.
The SEC is kind of playing offense and attacking the whole industry. This is not a healthy way to regulate an industry. Your regulation through enforcement, as opposed to what we're seeing in other countries where they're doing the work. Right, they're codifying, they're creating a framework that allows an industry to grow while protecting consumers. And I think that's really what the U.S. is lagging.
Now, Chair Gensler, I'm pretty sure you might say, well, look, a founder in that sort of business might be saying this, but what about some of these players, like we've spoken to many who've perhaps been part of previous administrations who are now, advisors to some of these companies and worried a little bit about the holistic nature of really trying to regulate and worried that it is more about enforcement rather than the rules of the road at the moment?
Caroline, there's nothing incompatible crypto in our securities laws.
This is where the lie is. If he calls something a security, it can't be used the way that these digital assets need to be used, and he knows it.
Securities laws were brought about to protect the investing public against fraud and schemes and manipulation, and it was through this idea of full, fair, and truthful disclosure, registering with the SEC when you're raising money from the public and the public's anticipating a profit. It's pretty straightforward, actually common sense approach to helping the public in investing. So this broad field, we have one goal at the SEC is for them to come into compliance, whether it's the tokens, that's basically people raising money or offering these tokens.
That's what Ethereum did, and you haven't done anything to them.
And it's also what I'll call the storefronts, but they can call themselves crypto exchanges or lending or staking.
Okay, that's what Joseph Lubin is bragging about doing right now, and you're not doing anything to him. You can't pick and choose winners and losers. That is at the core of the problem. And I don't even want you to go after Ethereum. I want a level playing field. And if you don't have a level playing field, you have corruption.
Service or other intermediaries to come into compliance and ensure that they don't mislead the public, but also that they don't commingle the funds, they don't take the public's funds and do things we just don't allow in our financial markets. We don't allow the New York Stock Exchange to also play with the customer's funds and make markets, run a hedge fund, run a dealer, be in the clearing business. We separate.
All right, enough of him. I can only listen to so much of that. Now, Stefan Huber did put together, he illustrated the absurdity of this. And a lot of you may or may not remember, but early when we started exposing Ethgate, The SEC, Charles Gasparino had sources from the SEC, and they were blatantly lying to him. And here's the illustration of the lies.
Ethereum's been given the green light. It could keep working, even though it didn't register any of this stuff. Ripple, as you know, is being sued. What's the difference between Ripple and Ethereum? Well, the SEC would say Ripple is still building out its platform.
The Ethereum platform is built out. The stuff is now trading like any other commodity, not a security that is used to build something where you get something in return.
Build on top of that. Turns out we can build a financial
you're
plumbing
saying
layer.
That the concept of launching something that doesn't scale and then rebuilding it as something scalable
it
was
scales
the
somewhat.
Initial plans or initial thing.
So the exact opposite true. XRP ledger is built out. The Ethereum network was not built out when they gave it the free pass.
It wasn't going to be scalable for sure.
The Ethereum platform is built out. The stuff is now trading like any other commodity, not a security that is used to build something where you get something in return.
Analyzed, but our current strategy is that we have 3 pools of Ether. So one pool is the pool that we sell. The other pool is the infinitely growing pool that's going to get mined. And the third pool is a small pool, roughly something like 30% of the Ether that we sell is something that we're going to use as an organization to pay for development long term.
That's
Use
security.
as an organization to pay for development long term.
The Ethereum platform is built out. The stuff is now trading like any other commodity, not a security that is used to build something where you get something in return.
We are probably almost certainly going to release Ethereum 2.0 sometime around 2016 or so, which will hopefully have much more advanced cryptography protocols that will really solve the scalability issue to a much greater extent. We are probably almost certainly going to release Ethereum 2.0 sometime around 2016 or so.
The Ethereum platform is built out. The stuff is now trading like any other commodity, not a security that is used to build something where you get something in return.
Build on top of that. Turns out we can build a financial plumbing layer. The concept of launching something that doesn't scale and then rebuilding it as something scalable. It scales somewhat. Initial plans or initial we knew it wasn't going to be scalable for sure.
It's absurd. The whole thing's absurd. Now, this is Joseph Lubin just a couple of weeks ago right here saying that basically he and the regulators, they're on the same team. It's all those other bad guys. They're the bad guys, but Joseph Lubin's on the same team with them.
There's a pall over the ecosystem right now. I think in the new year, we turn that into the opportunity to help regulators and other global leaders to understand how good all this is and how they should have an adversarial relationship with CeFi, but DeFi or the people in our ecosystem who are proponents of decentralization, we're kind of on the same team as the regulators. We're trying to empower consumers and institutions, and we're trying to protect them.
So he's trying to protect us by disguising the whales in the Ethereum ICO, I guess, is that's protection. Well, there's only two. I don't understand why the whole industry is not outraged by this. There's only 2 people who have been able to in crypto that have been able to successfully come in and see us at the SEC. That is Sam Bankman-Fried and Joseph Lubin. And that's really all you need to know, except for this. Look at this. Let me tell you what I see when I see this. This is like we're being made fun of when I see this. This is Ethereum Denver. Okay? And then there's this. Look at this. Oh, that makes me want to vomit all over my keyboard, so I'm going to stop. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that I almost vomited on my keyboard. Thanks for listening.